Okay, so another Tuesday market update, and we'll start with Adam, of course, from Flagship Home Loans.
Great. Thank you so much, Danielle. I wanted to tell everybody about the NHS program that is for all Pennsylvania residents that qualify. And it is a program that's for FHA and conventional buyers. It is a down payment and or closing cost assistance. Long story short, it allows someone to get up to $30,000. Yes, $30,000 of assistance for closing costs on an FHA loan and down payment and closing costs on a conventional loan. So I'm just going to hit it at a very high level. Um, Long story short, it's a second mortgage that people apply for. Right off the bat, I want to be very clear that there is a cost to it because there's a monthly payment associated with that second mortgage. It's 2% higher than the note rate on the first, and it is a term of 7 to 10 years. So to put that in perspective, the one that I have right now for a borrower, they're getting a second mortgage to cover closing costs on an FHA loan with about $14,000, and the monthly payment is $181. So it is a little steep, okay? But for your well-qualified borrowers, especially young borrowers that don't have the savings or the parental help, but they're making good money right now, this is gravy. This is going to allow them to go to higher levels with their purchase because a lot of times with our younger buyers, they're really limited on their purchasing power by the money they have. So this helps. But there is one thing to navigate. With the FHA portion of this, there is an income limit. It's 105% of the median income, and we will later look at some examples of that in our counties and what that actually means. But right now, temporarily, I don't know how long it'll last. There is no income limitation for the conventional portion of it. Okay. Now, it does say first-time home buyers only for the FHA, so we do have to be careful because some of these overlap and there's restrictions on FHA that's not on conventional and vice versa. But the big thing is that it pretty much just goes hand in hand with your first mortgage. If your first mortgage qualifies and the person's eligible, they're able to get this. Now, it is a 21-day turn time to get this. So we do want to allow for a little bit of additional time because we have to have the appraisal back, we have to have the approval, and we have to have the updated 1003 from the lender in order to apply for the second mortgage. So I would say safe to say this is a 45-day closing. We can probably make it happen faster, but I want to make sure that we're setting reasonable expectations. Danielle, if we could bounce over to the no income limit. Um, Actually, the other one the other one that I sent that's for
Oh,
uh,
sorry, I saw. Hold on. Did you send
the
me
one that's
three?
for conventional. Yeah,
Hold on. Give me 1 second. There's another. Where did you send it? There it is.
there should actually be another two.
Yep. Hold on a second. That was
Okay.
my fault. I see it. I only saw the two initially, but give me 1 second to pull it up.
So again, this allows buyers to borrow more than the value of the house. You can see the CLTV limit of 110. That's combined loan to value ratio. That's combined first and second mortgage up to 110%.
This is the conventional one.
And it does require an 8 hour course that the buyers have to go through. So there is a little bit of schooling associated with it. So the big thing here is right now, forget about what it says in the objective at the top there, because it does still mention low income families. They just revised this hot off the presses yesterday. They revised this to no income limits for the conventional. It does have to be a first time home buyer. Um, and then the income limits, that was good timing, Danielle, if you want to pull that up. The income limits, to give you an idea, a lot like the USDA loans, it does go by how many family members are in the household. So let's scroll down to like Dauphin County. Allison, Annette, and Pat, you guys are, Dauphin County is a good one to look at for you. Okay, great. Let's take a peek at Dauphin. So we can see for your normal, I shouldn't use the word normal, but for your typical families with a couple kids, our limit's right around, and actually it would be the 105. So it would be the column to the right. So these aren't necessarily quote unquote what we would call the low income or median income for 80%. That's where the it's escaping right now. Home Ready, Home Possible with Fannie Mae and Freddie Mac. That's the 80%. But for this program, we can go up to 105. So again, this is what's on the application. If we have two spouses and combined their income is 150,000 and the loan works with just one of the spouses that makes 100,000, we don't have to put the income for that other spouse on the file. So we can make this work in a lot of situations. So that's the income aspect of it. I'm sorry, Pat, did you have a question?
She wanted to know if she can get a copy of the slides, and I said yes. But just keep in
Okay.
mind that these programs do change from time to time. So just use the slides I give you as a guidepost, but of course, getting the
Yeah.
people to add them, for
Yeah,
actual
always
qualification.
absolutely. Always check back with me because literally 2 weeks ago I got the slides for the conventional, and just yesterday I got the one that was updated saying that there's no income limit now for the conventional program. If we bounce back to the conventional closing cost right there, um, so again, the one thing I would keep in mind is that it does have the maximum purchase price of 385, which I would say for income levels that we were just looking at, that's probably the upper range of where someone that would be looking to purchase would be for. Now, this is also for, if we look at the conventional, we can use this money towards the down payment. Remember, FHA, they have to bring their 3.5%. Conventional, this can go towards closing costs and down payment. So this is a huge help. And it can also allow for cash back to refund them for earnest money deposits and third party fees as well. Okay. There is a cost to the NHS. It's somewhere between $1,000 and $1,400 that could be added for that cost, but the buyer doesn't pay it out of pocket. That's part of the loan amount. Okay, part of that second loan. And then lastly, Danielle, if you just want to bring up that side by side comparison. There we go. This is really, I would say, the handy one that we can keep handy. Objective, again, FHA, got to have their down payment. For the conventional in the middle there, this can go towards the down payment. It's for one unit single family homes, has to be owner occupied, and has to be a principal residence. Also, non-occupying co-borrowers are not allowed for. Okay. So non-occupying co-borrowers not allowed for. And also, the people have to be living in Pennsylvania to start with. So, folks coming from out of state, this program won't work for them. Um, let's see, anything else? Again, there is a cost for that second mortgage. It's not a forgivable one. They do have to pay it back, and it is a little steep because it's 2% above the note rate on the first with a cap at 10%, and it's amortized over 7 or 10 years, which makes it a little bit more expensive. They do allow for cash back, and there is a counseling session required. So hope that gets the thoughts churning. You might even have some people that you're thinking of right now that might benefit from this program. Please send them my way. I'm excited to help them out.
And they can prepay that, I'm assuming, at any time.
Oh yeah, and I would say pay that off right away.
Yeah, of course,
Yep,
I'm just making sure, since
yep,
it's
no
not on
prepayment.
there, prepayments, we can do those. Good. Yeah.
Yep.
Yeah, that at least gets them in the house. And then, tax refund time, dump that on there, kind of get that down and out of the way. But yeah, if you don't have the family support or equity from a house you're selling, which obviously this is a first time home buyer product, but you don't have any of those sources of funds that a lot of buyers have had in the last 5 years towards purchasing, this could help them be more competitive. Seller help's coming back a little bit, but I'm seeing a lot of stories lately now where with the spring market picking up, there's some more competitive offers coming back. So that could help that edge that your buyer needs to not need the seller help and to get that 5% down conventional product that they might otherwise qualify for if they had the funding. So might be
Is
interesting.
there a minimum credit limit?
Yeah, I think it was on
I
their
mean, of course, I
620.
know.
620.
Six. Okay, thank you.
Yeah.
Yeah, 620, which of course is the minimum for conventional. Um, so yeah,
Yeah.
620.
But yeah, it'd be interesting to see how the numbers work out on an actual scenario of one of your buyers if they needed that. So good product. Excellent.
Mhm. Like I said, the one that's on the top of my mind, I have a borrower that's borrowing 14,000 in that program, and their monthly payment is $181 for that second loan. So that just gives you an idea of what the monthly payment might be with that.
Yeah. So, I mean, it's not terrible. I mean, I had recently had a student ask me if people are still doing or if it's coming back like 80-20 loans, not the eight full 80-20, but like an 80-15 or an 80-10 where to avoid mortgage insurance. And I said, wow, I haven't heard that in long time, because mortgage insurance is just so common. And I said, I think mortgage insurance would probably be cheaper than like a second loan payment.
Yeah.
But it kind of reminds me of that having that second loan payment. But it's not that terrible, and again, if it
Well, I
gets
think
you in.
the cost of monthly mortgage insurance has come down drastically. FHA was 0.85% annually. Now it's 0.55. And also on conventional loans, it's a fraction of what it was. When I started the industry 15 years ago, people were paying $400 if they were only putting minimum down on a purchase. Or on a refinance. And now I have people that are buying $400,000 houses with 5-10% down and their MI is only $60, so it's
Yeah.
um it's a drop in the bucket compared to what it used to be. Yeah.
And ultimately still it could be better than renting, and they're at least building equity. And
Mhm.
even if they in 3 or 4 years they might build enough equity just to refinance that little thing out of the way and get a whole better scenario. If rates come down also, they could get a whole better scenario by just refinancing in a few years. So still better than renting.
Yep, absolutely. And also one thing that people don't talk about a lot is mortgage insurance actually lowers the risk for the lender. So often, depending on the scenario, we get better interest rates on the first position mortgage when someone starts with just a little bit of mortgage insurance, even if it drops off within the first couple months. So if someone starts a loan at say 81%, they might get a 1/4% better interest rate,
Mm,
depending on what their FICO score is on
yeah, it's true.
their primary loan, I should say.
Yeah, that's true too. Yeah, all good things. It just stacks. So
Yep, absolutely.
excellent. Awesome. All right. Jake, what do you have for us today? Anything interesting going on in the insurance world? Jake Brendel from Goosehead Insurance.
Hey, good
Hey.
afternoon, good morning, depending on when you're listening. Jake
Yeah.
Brendel, owner operator, Goosehead Insurance. No exciting insurance programs in my world, that's for sure. But I did want to take an update or take a minute to just talk about a really a quick hitter. I'm not going to talk at nauseum at you with the beautiful weather out there today. But I've been getting hit with this a lot lately, especially as spring market starts to get up and running. I wanted to talk about dwelling limit or replacement costs versus appraisal value. So a lot of times in the real estate world, lenders, realtors, even clients will think about insurance in the terms of what the house is worth, what we can buy it for, what we can sell it for, all that type of stuff. And when you see the number on the insurance policy, you associate that with each other, right? Well, why aren't they the same? Or why is this number on the insurance so much higher than what we just bought the house for? And the reality is they are two totally, completely different evaluations on the way that we look at the house. We all know on this call, appraisal value, how that's determined, how we come up with that. But the dwelling limit or replacement cost on the house has nothing to do with the appraisal value, has everything to do with rebuild. What does it cost to rebuild the house in its current condition, right? So a lot of times with new builds, houses, you'll see those numbers will be very similar. That makes sense, right? The house was just built and sold. But the older you get, the bigger the gap from when the house was built to the time of purchase, the larger discrepancy you'll see in that number. So, for example, if you have a 1900 build with original solid brick or solid stone, and that house is selling for 230, $240,000, you're going to see rebuild amounts at 450, maybe $500,000 or even more. It's a pretty big discrepancy because, again, it is rebuild of the house in its current condition using 2025 cost of labor, cost of materials, right? And everything that has gone on in the world, that stuff has really skyrocketed over the last couple of years. So that's a big one. As the other thing I like to educate on is value of land has absolutely nothing to do with insurance either, right? So a lot of times that will increase your purchase price, right? Or the appraisal value, but has nothing to do with the insurance side of things, right? We're only insuring structures on the property or the primary home that goes along with that. Um, the only thing where I would say maybe there's an exception to this rule per se is if you have an investor. Investment properties or investment loans are a little bit more forgiving on the insurance side as far as qualifications, what type of insurance policy or what limits you have to have on the policy in order to qualify for the loan. Or there is a cash buyer, right? All rules are off. So in those situations, you can insure to market value. Doesn't mean that you should, right? Because there's still a lot of risk there if there is a fire or a total loss scenario. But insurance can be a little bit more flexible in those scenarios where we can insure to market value to help control the cost of the policy to get more money on a monthly basis into your investment, into your investor's pocket. So that's really it for me. Quick hitter today, but a topic that I run into a lot. So, questions on that?
Yeah, I'm not gonna let you get off as easy. And actually, I'm actually glad you brought that up today, because I think it is important to specify that. You would be surprised. There's actually a TikTok out there floating around from a local agent, and I'm hoping it's not one of ours. But um,
Oh boy.
and her piece of advice was, I like to call all my homeowners and tell them that their property values have increased over the last few years and that they should call their insurance agent and make sure they're covered enough. And I was like, that's not how any of that works. Like, don't do that. So it's actually really important because it's not obvious to everybody that your home is not insured to market value. It is insured to replacement value. So really good point there. And you did mention land not being insured. If we have someone who buys land, is there any, should we be recommending like liability insurance of any kind if someone were to get hurt on their land? Like, is that still something we should be recommending? Is there any level of
100%.
insurance? Okay.
100%. Yeah, liability in my opinion is the most important part of insurance in any situation, right? So vacant land or, a property with a house, but vacant land specifically, somebody comes and stumbles on your land or somebody's there that shouldn't be and gets hurt. And then the way that our society works comes after you for their medical expenses and then and or sues you on top of that. Liability will help in those scenarios 100%.
What
Okay.
if it's posted no trespassing?
Yeah, you're kind of getting into the more legal side of things there, right? Where the lawyers will kind of balance it out. But in my experience, it doesn't totally um, absolve somebody of liability in those situations. So yeah,
It's
I
crazy.
would still 100% recommend having some sort of liability. And generally, liability is pretty cheap too. So it's not like it's a huge amount of money to insure it, but one of those things you'll wish you had, something happens.
Great. And then the other question is for agents, just as a reminder, is at what point timeline wise, if a house is vacant or becomes vacant for selling, it's my understanding that you should notify your insurance agent that it's vacant. Like, is that a different kind of premium or notation? Like, can you tell us more about that?
Yeah, the general rule of thumb for most carriers is 30 days, right? If anything beyond 30 days or a property becomes vacant, you 100% want to switch your policy to a vacant dwelling policy. Insurance is all determined by occupancy, right? Who lives there or who doesn't live there. So, for example, if you have a house and you've exited because you're selling or for various different reasons, could be renovations, could be anything, and a claim happens and the insurance company determines that, hey, nobody is living there, you give them all the ammunition that they need to deny a claim in that situation, right? And in their mind, we always got to think, well, if a claim happens, fire, pipes burst, anything of the sort, who is there to stop or mitigate loss, right? And when it's vacant, nobody's there, right? So they want to be able to rate for that accordingly. Those types of policies are probably the most expensive types of policies that are on the market. However, a lot of times in my experience, they're short term, right? When you buy a property, and you're doing something to it or whatever the situation is, it's usually a temporary scenario for a couple months until somebody then becomes and occupies that policy. So the cost of it is really mitigated by that, where then somebody occupies it, you then in turn switch it to a more traditional type of insurance policy to cover whatever situation you need.
Yeah, that's just a nice added value as an agent to say to your client, and they don't have to call them, but you can just say, hey, it's going to be vacant for an extended period of time. You might want to call your insurance agent and let them know it's going to, your rate's going to go up, but it's to protect you because if something happens, it might not be covered. And that way you've just provided that extra level of service to let them know about a possible issue that could happen for them. And again, it's on them to do it. They don't have to do it. That's their risk. But as an agent, you've at least notified them and informed them because most people don't know that. So anything we can do to add value as an agent, I think is a good thing. Or you can even make a social media post about it. Do a TikTok, do a video, do a graphic, kind of make yourself sound like you're knowledgeable and can help. So that's all really good information. Sorry, any questions for Jake besides me? Awesome. Excellent. Well, then I had just a couple things to share with you guys. Um, Nothing earth-shattering news-wise, but for anybody who did not go to Elevate and maybe has not seen some of the news, I'm just going to share my screen again. So just going to share some of the exciting things coming that were announced at Elevate. One is we are going to have a new back-end system. And so KV Core will be going away in a few months, which again is exciting. And which way is this going to go? So we will have IVRE Connect. It will be a full-fledged intranet system where everything will live in the same place, plus all of the CRM, all of the kind of back-end systems all in one awesome place. And then we're going to have the home app, which will be an app that you can share with your clients and they can actually schedule showings with you. They can interact with you. Everything will be in like a one great app. So that's really exciting news. I'm hoping this crap. Sorry, hold on. So sorry. I thought I was going to be able to scroll through these. Okay. Please hold. Well, poop. Stop share for a second to get myself situated. Stop share. Please hold for technical difficulties. I was able to. Not those. There we go. Okay, so now I'm in business. Let's try that again. So that was the IVRE Connect and Home. So just the new logos. I'm sure you've seen them on social media. But just to reiterate, these are not a replacement. They're just an enhancement. So there's all different versions of it. And again, the vertical version. This does not absolve us of being compliant with actually using Iron Valley real estate of whatever brokerage you are with. So in your marketing and advertising, it still has to be state compliant with whatever state rules or laws you have. But you can use this in addition to that. It just shows you different ways that we kind of compiled it. So it looks kind of cool and edgy, just in different options. They are in all the swag stores. So all the different vendors do have all of this material available for purchase now. New signs are coming. This is a little information about the IVRE Connect. So all the different tools you're going to have, CRM, agent websites, company websites, marketing tools. So pretty much everything KV Core has, but better and easier to use, plus that intranet where all of the resources will, instead of having like a million clicks to get to everything, it'll all be very easy to find. Okay. You'll have market reports, property detail reports, and then information on the go. So it'll be mobile friendly. You have like your contact card you can share with people. So all kinds of fun, exciting things, ways to keep track of your clients, tasks. And then the home is going to be that integration between the Connect and the home to connect with your clients. Okay, they can get updates on their transactions. So the more you use it, the more you're going to get out of it. And again, like I said, they're going to have that really cool app. So just wanted to show you a little bit again about what we shared there in case you weren't there. And then a couple more updates from me. I wanted to let you know that on the education side of our business, they are running a $50 coupon, if you will, or savings on live webinars through the Center for Real Estate Education or for Realtor Education. So the At Home with Diversity is on sale. So $50 off of each of these. So the At Home with Diversity is only $137, but we're also offering that at GHAR on April 8th in person. And if you take that one, it counts for your fair housing requirement for both NAR and your continuing ed. So the state is requiring a fair housing course this year for your continuing education cycle. So if you take the one, I guess this one too, on March 25th, which is next week, for $137 online, but it would count for your NAR fair housing requirement and your CE requirement. And it counts, I think, as an elective towards, I think if it's broker courses or something else. So it counts for a lot of things, just to take one class, basically. And you get the certification. So it's kind of like a whole bunch of things all in one for that one. Then the other three ones that are on sale right now is marketing strategies and lead gen. That's only $75. That's on April 30th. The green designation is a 2-day course. That's $260. And then the military relocation professional, that's $283. And that one's on June 11th. So they're all available on the Center for Realtor Development. Center for Realtor Development. But if you have questions or want to sign up for them, just ask me and I'll send you a link. And then the last thing I had was one of my students actually was asking me about how much like repeat business I get or realtors get, repeat clients. And I thought, it's actually interesting how often I see in the multi-list, because I do kind of look, I'm nosy. When I see someone listing a house, I go back and I look at prior multi-lists when I'm looking for information. I'm always surprised how many don't list with who they bought it from. Like I noticed that. I don't know if anyone else notices that, but I noticed that kind of thing. And so I kind of got into talking about staying top of mind with my clients. So I had read some statistics in my ABR brochure, and it said that 75% of buyers only interview one agent, 88% of buyers use an agent, and 43% start their search online. So I really think it is important to stay top of mind. So just like three things that sort of I do at least. And I think one of my most important things that I do, so just kind of some tips, is I do consistently market to my sphere and to my past clients. I mean, almost every month they get a postcard or a mailer. And then I send birthday cards. Some of you on here have probably gotten a birthday card from me at some point or another, but I send birthday cards and I have hundreds and hundreds of them right now all over my office. Actually, I have a stack right here that I have to sign. These are September's birthday cards because my staff are working through them. And so I send birthday cards and they're not branded. Like I don't put a business card in them because I'm sending marketed pieces all like every month and they see me on Facebook. These are just relationship enhancers. So everyone gets a birthday card. And then I use Facebook to find congratulations on new jobs, babies, sympathy cards for pets and family members. Again, those don't get cards. That's tacky, but it's a relationship enhancer. So just like staying that top of mind throughout the year. I mean, people will there's a lot of dead pets. I send so many sympathy cards for pets. It's so sad. But like those staying in touch with people is, and then I do also have, which costs no money every year, at the beginning of the year, I change my graphic. It's a Canva graphic. It's just a happy birthday graphic that's like branded for me, fun colors and stuff. And so then the people on Facebook, when it tells me it's people's birthdays who maybe don't rise to the level of getting a physical card, in the morning, I get up and I see whose birthdays it is, and I send a Facebook graphic in a messenger, and they get a happy birthday graphic from me. So it's all those little touches that keep you top of mind. But like if you're not marketing to them, someone else is for sure. And I've heard so many stories of people whose cousin bought from someone else or, who's, you know, close friend and like, oh, like they forgot I was an agent. And it's like, yeah, they're going to forget. Like if you don't tell them, someone else will. So they're just some simple touches that I personally do. And I don't cold call. I don't do any because I train. So those are like just my background things. And people will call me who I haven't talked to in years. I recently had folks call me that I never, literally never, ever speak to, never. And their house burnt down. And they literally messaged me on Facebook, said, "Can I call you?" They called me and said, "Our house burnt down and we just thought we should tell you." That's all they said. And I was uh, like, "I'm so sorry," but it was like they just felt they had to tell me. And I sold them a house, and I'm going to list that one. But it's just because they get it it's just regular. It just never stops. And then like the library near me, they hang my stuff up in the library. And then she sends me a picture like, "Oh, our favorite realtor." And so it's just that constant, constant, constant. And I think they also know that like if they move, they know I'm going to know because it's going to come back. Like, I'm at least going to know on your birthday that you moved and didn't call me. I think it's like a guilt thing. So that's my advice. So, any questions? So, nothing legal, nothing big news this time around, at least. Has anybody heard anything in the news that they have questions about or concerns? Okay, everybody's quiet. Everyone's ready to go outside and play in the sunshine. I don't even know if it's sunny out, but I know it's warm. My office doesn't have windows, so
Well,
It's
has
very sunny out.
is it sunny out? Yeah, I don't.
anybody heard anything about or any comments about interest rates coming down by any chance?
Yeah, I could try to handle that one, Allison. Um, it just seems like they keep kicking the can down the alley. At the start of 2024, everyone was saying, "Hey, rates are going to come down 2025, in t late 2024, 2025," and then inflation just never got curbed. So, they're kicking the can down the line as far as the Fed policy. Um, but a few things to note. Um, the Fed policy usually has about a 4 to 6 month lag. So even if tomorrow the Fed would come out and say, "We're dropping interest rates a 1/4%," you might actually see interest rates on mortgages go up temporarily because when the Fed says that, that boosts the economy. If the Fed drops interest rates, investors tend to think that the stock market's going to do better. And remember, mortgage rates are influenced by the bond rates and our treasury notes. And when the treasury notes go up and when the bond market goes up, interest rates go down. Okay. So if the stock market and the bond market are competing for the same pool of money, and remember when times are unstable, people will take money out of the stock market and put it into securities. So when things are unstable, when there's recession and the bond goes up, that could cause interest rates to go down. So when the Fed makes an announcement and says interest rates are dropping or they're going to drop the interest rates, that actually temporarily causes the market to go up and interest rates to go up a little bit. So I know I'm giving you a lot more than you're asking. I think that interest rates are going to hold steady. I think that before monetary policy kicks in, we may see a recession. There's a lot of talk about it. But the other thing to keep in mind is that it's not just about what's in the news. It's about what was the market expecting compared to what's in the news. If the market was expecting a recession and the recession starts, that might not cause interest rates to go down because the market was already prepared for it, right? So remember, fear and greed. There's a lot of news out there. Everyone wants to talk about interest rates going down, but I think the general concept right now is that interest rates are going to hold steady. Geopolitical events will be the mover. If we have a war breakout, if we have natural disasters, not really tornadoes because that's more localized, but if we have severe floods, hurricanes, things like that. That geopolitical stuff could cause interest rates to go down. But really, I think all of the things being equal, we're looking at probably into 2026 till we really see rates drop again. And while we're at it, what are dropping rates? What is that? Is it 3%? I don't think we're going to see 3% again. I don't think we're going to see 4% again. I think we have to temper our expectations of what low interest rates are. I think that low interest rates right now, in the Fed's mind, in the people that are making the policy, I think in their mind, low interest rates would be into the fives, right? And right now, we're safely into the sixes. I mean, FHA rates are in the sixes for people with decent credit scores. Well-qualified conventional borrowers with no paying no points. We're seeing interest rates into the mid to high sixes, which is fantastic. So really, I don't think it could go much lower than 1% from where it's at right now without some sort of monetary policy to try to stimulate the economy. And I just don't see that happening anytime soon.
Thank you.
You're
So
welcome. Sorry,
that was me.
I hope that wasn't too much.
It was not too much. It was perfect. Thank you.
You're welcome.
Yeah, no, I agree. I think fives and sixes is where it
That's
should be.
healthy. That's healthy.
Yes. When it was in the threes, I kept saying it needs to be better. It needs to be higher. And I'm a terrible realtor for saying it, but rates need to go
Yeah.
up.
Yeah.
So no, I agree.
And one thing to add to that, if you ever are interested, there's a website called Mortgage News Daily. Okay, and I get a lot of my information. It's not a pay site. Mortgage News Daily, and right on their landing page, there is a graph of average interest rates, and you can click on it and see average interest rates over the past 50 years. Check it out.
Mm,
It'll open your mind. You'll realize that over the past 50 years, interest rates are always between 5 and 10%. We're right in the wheelhouse. We're right where they should be. Our expectations have been changed because of what's happened since 2010.
yeah, absolutely. And if you're anywhere within driving distance of GHAR in May, we have a finance broker class coming up that I'm teaching. So not to be biased, but you could learn a lot more about what Adam was explaining with the bond market versus, the mortgage interest rates and how they actually affect each other, not the Fed rate and all the good stuff. So if you'd like to learn more, sign up.
Is that for everybody, Danielle? Could I go to that?
I'll see why not.
All right, cool.
It's 45 hours, so I don't know if you want to commit that, but
Ooh,
yeah,
maybe
yeah,
I can knock out CE while I'm doing that.
that's right. We start back at Hamilton in the first bank. So, yeah, this is money. So,
Nice.
but yeah. So excellent. Well, I'm glad we got to do this today and catch up on all kinds of interesting tidbits of information. And definitely, Adam's mortgage product is something to definitely keep in mind as we enter the spring market for sure. So, um, hit him up if you have someone low on funds but otherwise well qualified. That's definitely key. And keep Jake in mind for all of your insurance needs. I know I say Jake, Jake, Jake all the time. So my class recently, someone was like, so like, what do you do for, like insurance? Like, do you have a person or blah, blah, blah? I'm like, I have my own person, but I just send them to Jake. So,
Thank you.
yeah,
Thank
of
you for
course.
your support.
Of course. Of course. All right. So, otherwise, have a great day, everybody. This recording will be available as always in the Foundry. So, if you want to reference it back, it will be available.
Does Jake have a phone number?
Jake does have a phone number.
He does. It's 717-844-6206.
I also put it
Thank
in the
you.
chat if anyone wants to grab it
There you
from
go.
there, except I put too many ones.
Thanks so much for doing this, even though we were a small group again. Appreciate it.
All right.
Thank
We,
you.
yep. Have a great day, everybody.
Thank
too.
you.
Take
See
care,
ya.
everybody. Go Phillies.
Go Phils, baby.